Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University, and it's Monday, November 19th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. And with that thought, let's go ahead and take a look at what we had happen during the last week. It was an interesting week in the market, and we had a number of different important economic indicators that came out. Started on Wednesday with producer price index, retail sales, business inventories. We then looked at Thursday, and we saw we had consumer price index, which came out basically flat, but jobless claims, Empire State Manufacturing. Great deals of disappointments as we looked at last week's economic announcements. Next, we come into a shortened week because of Thanksgiving. Let's see what we've got coming up in the next week. As we look at on Monday, we have existing home sales coming out at 10 o'clock. We come to Tuesday, we've got housing starts at 8:30. Nothing much else happening throughout the day. Bernanke speaking at 12:15. And then we go to Wednesday, where we have jobless claims, which usually occur on Thursday. But because of the holiday, we'll be seeing that early on Wednesday at 8:30. We got consumer sentiment coming out at 9:55. And so there are a few things that are coming out this week as far as economic announcement. Thursday, everybody stay home. Thank the Lord for the wonderful world that we live in, and nothing much happening on Friday. November 23rd, as we work our way towards the end of the year, sitting in this fourth quarter, which should be a great quarter, but it looks like we're having post-election blues. As we look at the economy, we see that it has only one way that it's been going, and that is in a downtrend. We've come down to support. We hit that 1345, and we see that on Friday, we ended up with a little bit of a move to the upside. We'll look at that in greater detail as we look at a magnified view. So we are in a down cycle, in a downtrending market. We are spending time below the 30 and 50-day moving average. Notice we had our cross take place there, where the 50 to 30 crossed over the 50 to the downside. We broke through that 200-day moving average. So from a macro view in the overall market, it looks like we're not looking very strong in the market. Typically, we see a holiday week that usually ends up being a pretty decent week, usually ends up being a positive week. And notice how many days in a row we've had to the downside. All right, so as we look at it, we see we've got 1, 2, 3, 4, 5, 6, 7, 8 days that we've had a downside, except for Friday, where we ended up with a higher high and a higher low. First time that happened in a week. So that is, for many of us, a buy signal. It is confirmation of a reversal, and we'll see how we look at as we look at Monday morning and see how the market comes in and what it does. Let's take a look at the Dow and see whether it did what the overall S&P did. Notice trading below the 200-day moving average, had the death cross take place where the 30 went through the 50, and we see that we are sitting somewhere near an old support line that I had drawn in from some time ago, and we did end up with a slightly higher high than we had on Friday, and we ended up with a positive day out of the Dow after the same number of days down that we have been seeing in the SPX. Next, let's take a look at the NASDAQ and see exactly where the NASDAQ went, and it knows its direction, and it is down. Again, had the cross, trading below the 200-day moving average. We are in a down trend, down cycle, except for Friday, where we had what looks like a reversal signal, where we got a higher high. We did get a lower low, didn't we? But we ended up in a positive candlestick for the day. Confirmation of a higher high, higher low on Monday could give us some kind of rally week, as we have a shortened week and a shortened day on Friday also, as we don't have a full day of trading between after the Thanksgiving holiday. Next, let's take a look at the Russell. Very similar to what we've been seeing, a breakdown, downtrend, been in a downtrend for a long time, basically since September. So the post election blues are taking place. We really didn't expect this until after the first of the year, as we are in what should be the strongest months of the year, and we're not seeing that as we're getting our reaction to fiscal cliff. We did get a little bit of a rise on Friday, and what brought that rise up on Friday was Harry Reid came out with an announcement that we were not going to wait until the very last minute to take care of the fiscal cliff, and they would work very hard on bipartisan passing of that particular problem. All right, looking at the indexes for the year, we see that for the week, look at the change. All those are negative numbers in the Dow, NASDAQ, S&P 500, Russell 2000. So for the week, the market went down. Percentage changes anywhere from 1.4% on the S&P to 2.4% on the Russell, which certainly led us down. Notice the year to date we are still in positive numbers. NASDAQ still almost up, almost 10%. S&P up 8%. Look at the Dow, up only 3%. Russell up 4.8%. So we've seen a major pullback for the year as we head into these Thanksgiving holidays. Well, let's take a look and see how much fear there is in the market. Looking at the VIX, you see we are smack dab in the middle of what one would call our normal range. Not a lot of fear in the market, just a very nice steady pullback in reaction to some of the news. And we now know who the president's going to be. The other thing that we had going on is that we saw corporate earnings having some difficulties, as we see our major companies having problems with what one might concern is an international problem with Europe in recession. So having its effect on the market, one that we probably did not expect. There we are. Notice there's our range, 20 to 15, and we see we're right smack in the middle, right around 16. So the VIX, not a lot of fear in the market. Let's take a look at the bond market. Oh, no big surprise. As the market pulled back, which way did the bonds go? Up. So, with a reversal, what can we expect? Here's a potential thing for you to look at as a potential trade. This should pull back as we get a gain in the market. So, potential for the bonds to be very near that previous high of 127.35. So, watch that carefully. Look for your signal. Looking for lower highs and lower lows on the bond market. Let's take a look at the financials and see what happened to them. As the markets go down, which way would you expect the financials to go? Well, let's see what happens. There we go. Looking at the financials, well, it did exactly what we expected. Pulled back, but look at that relative strength. While the S&P is well below the 200-day moving average, look at this. Sitting still above that 200-day moving average as QE3 shines nicely on the financials, and they're holding their own just fine. All right, next let's take a look at oil. Looks like it's going nowhere. It's kind of a chart where you might be looking at some kind of strategy where you expect the stock to go nowhere and take advantage of theta to pull some money out of oil. Next, look at gold. Gold pulling back with the overall market. The international monetary constant gold has been pulling back. Did not get it back up near its previous highs. And as far as Friday, what kind of volume did we have as the market began its little bang up? Oh, look at that. We got a higher high and an outside day on increased volume. That should mean something to you. For those of you that are interested in technical analysis, that looks very much like a buy signal. Stocks to watch. For those of you that are gold members, stick around. We'll take a look at what we expect this week out of the SPX. We'll look at our favorite stocks to watch, and we'll see exactly where we think the overall market is headed for the next week. All right, with that thought, this is Butch Shorrock. It's Monday, November 19th, 2012. Have a very happy Turkey Day. And for those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. And with that thought, ladies and gentlemen, thank you on Thanksgiving Monday. And to our gold members, welcome to part 2 of Market Forecast. All right, let's take a look and see exactly what happened on Friday. We see that we ended up with a little bit of a bounce here. We did it on good volume. Where are we sitting? Well, we've got support back there below at 1358. And support at 1345, which basically we went down to that level on Friday and bounced off that. Notice what we have here looks very much like a reversal signal. Remember, we're looking for confirmation. That's one of the things we've learned from technical analysis. And so we could see a nice little rally as we have this a shortened week because of the holidays, both no market on Thursday and a shortened trading day on Friday because of that Thanksgiving holiday. All right, looking at Amazon, let's take a look and see what Amazon did. Gave us the same kind of move, bounced off that 200-day moving average, showing relative strength of the overall market. This looks very much like a buy signal, did it on volume. So with that, watch for higher highs in this heading higher if the market does cooperate with us during the coming week. Apple, did Apple finally put in its low? Well, look at that, volume. Looks like a absolute volume surge there. And look at, does that look very much like a reversal signal? Remember, confirmation is a higher high. Maybe some money could be coming back into Apple finally, and that, of course, would lead the entire market higher as we talk about Applenomics. Looking at AutoZone, we talked about it getting ready for that earnings run, and we see that it's doing that. Expectations for this to run to right up around 390. We talked about this last week, and it finally has come through and given us that move. CMG, not showing us a whole lot. We did get a higher high and a higher low. Notice that we had a low here. This low, whereas the market pulled back even further, didn't pull back as high. So we're getting a higher low technically, and we got a higher low and higher low on the daily scene. So CMG looks like it's ready to move up higher and go back and re-look at this previous high at right around 280, somewhere in that range, 290. So CMG could be a good week for CMG, looking for a buy signal on that. Next, we'll take a look at Google. What's Google doing? Came down, finally hit that 200-day moving average. Notice a lot of these stocks are at that 200-day moving average. These are your stronger than average stocks. These are your market leaders. That's why we watch them week after week. Google could be giving us a buy signal as we look at Monday morning. Watch carefully. This could be interesting as to where this week's going to go, and watching these stocks have a nice little run for a Thanksgiving rally. Next, let's look at GMCR. Going nowhere, but what do we got going up here? Earnings coming, so let's see if they change the complexion of this stock, as it's gone nowhere for a long time after its scandal with its inventory reporting. Next, let's take a look at ISRG, which has been showing us better than average strength. Look, it came down, hit that 200-day moving average. Look what it gave us on Friday. A sign of where we expect the market to go. Look for this heading for 550. Again, a stronger stock than the overall market, and one that should be a potential profit for you for the week if the market just cooperates. Looking at MasterCard, another stock showing increased strength to the overall market. Notice it's just sitting around that 50-day moving average. Got a buy signal on Friday, heading up. How high? Well, certainly the first target's there, next target's up there. So MasterCard, one of those stocks highly shined upon by QE3. Now let's take a look at McDonald's and see what we see there. And nothing. Not a good looking stock, and not a strong looking stock. No bullishness in it whatsoever. If you do get a bounce off of this, look to trade this to the downside, as it's not showing any relative strength in the market whatsoever. It's leading the market down. These are the kind of stocks that you make money to the downside on. Nike gave us a buy signal on Friday with a gap up, target 97.50, trading within its trading range, and then look for it to continue in that trading range. Unless we get some new news on Nike, it is going sideways. Priceline, one of those stocks we expect to move with the overall market. Didn't show us anything big on Friday. It gave us nice earnings. Look for this to run if the overall market does. Another bullish stock to have on your watch list, looking for that all-important buy signal. And finally, W.W. Granger showing us a great deal of weakness and dropped down well below that 200-day moving average, not trading anything like it did in the previous quarter. And we'll see what happens, as we did have a higher high and a higher low on Friday, and it did have a bit of a volume surge as it laid in that well, let's call that a spinning top on Thursday. So with that in mind, take a look at W.W. Granger. We could get a little pop out of this. What kind of earnings did it have? Wasn't that impressed. The institution sold off on the earnings news. Had a nice bounce afterwards, but nonetheless not the same kind of stock it showed us last year. So with those thoughts, those are our stocks to watch. This is Butch Shorrock. There are plenty of opportunities coming up this week, and just make sure you're on the right side of the market. And with that thought, it is Monday, November 19th, 2012. Options University, we appreciate you and glad you're here, and thank you.